In 1995, the then boss of Telstra, Frank Blunt, wrote a strategy paper predicting the company's copper PSTN network would be redundant by 2010. Its revenue stream, zero. So you can see why the national broadband network is Telstra's dream come true. It's getting heaps of money for decommissioning a network that was expected to be worthless by now. That's what I call a business plan. Well, Telstra's current CEO, David Thodey, held a big briefing on Thursday, mainly to tell shareholders that, sorry, there won't be a share buyback or a dividend increase for a while. So I asked him afterwards, what is he going to do with all the money? Well, David Thodey, I wonder if you could give us some clarity about exactly how much free cash Telstra's going to have over the next 3 years.
We expect to have about $2 to $3 billion in excess free cash over the next 3 years. And what was very important was to clearly define how we would treat that excess free cash to give certainty to our shareholders about what we would do.
So that's $2 to $3 billion over 3 years. Does that mean $1 billion a year?
Yep, roughly that, Alan. It's we also said at the end of this year it's about 0.5 to 1, 3 over the period, so it's roughly $1 billion a year.
And I presume that goes for longer than 3 years, beyond 2014. Is that right?
We're only talking about the 3 years for now. After that period, depends on the NBN rollout. We've got the NBN rollout schedule now, and so we can give some feel about the free cash.
I presume if you're not confident about the future, then you're not going to make any permanent increases in the dividend.
No, it's a very important set of parameters we're looking at. Firstly, we wanted to make sure that the balance sheet settings are right, and so we've talked about our A rating is very important to us. We've also talked to a lot of shareholders. Remember, 70% of our shareholders are domestically based, so the fully franked dividend is very important. And then we've got to look at our earnings capacity and what the NBN payments are like. We can look out over the 3 years. That gives us a sense. After that, we'll have to look at what the NBN schedule's like.
Well, can shareholders expect an increase in the dividend?
As we get more franking credits available, that would always be a very attractive option for us to do that. But as I've said, and we said this morning, the franking credits start to rise out at the end of that 3 year period.
Now, David Thodey, dividends are interesting to investors, but journalists like me are really interested in growth and in particular acquisitions. So let's talk about that. What are the sort of things that you're going to spend the money on to grow the business?
Well, you're absolutely right, firstly, Alan. It's very important to continue to look at growth opportunities for the company, and we want to make sure we've got the flexibility to look at them. But I should say right at the outset that any growth, be it organic or inorganic, needs to be put against some financial parameters, and we've been very clear about that, about being EPS accretive in 2 years, the return on investment better than WACC over the 3 year period, and also to be better than any on-market share buyback. So any growth or acquisition we do needs to be put against that set of parameters.
I've heard you say that Foxtel was your best investment, but if you had those sort of parameters on Foxtel, you would never have done it.
That's true, but there was a different set of parameters at that time, and because we were building the HFC network to make that an attractive investment, we were very clear about what returns we'd get. So there are times when you would look at different parameters, but at the moment these are the ones we've set ourselves, and we still stand by Foxtel, but we're also giving some sense to our investors about how we look at investments going forward.
But are you focusing on building applications for the NBN or building media content more generally?
Well, there's a whole range of them, Alan, because we can't just look at one. We've got to look at a whole set of them. We've already said that the network applications and services, this whole area around cloud computing, where we just allow customers to be able to use computing power, share it and use it that way. We've already set up a application ventures group looking at investing in applications. We've been looking at different media plays. We've put IPTV into the market. We're already looking at different constructs within the home that we can provide to consumers. We're already doing a lot of work around Asia and our investment opportunities there. We've brought Reach back into the family, which is the old overseas telecommunications company. So there's a wide raft of things we're looking at any one time, and we will continue to look at. We still think there's some really attractive opportunities around mobiles, mobiles continues to be a very attractive market, and we think that we have some good opportunities as we go forward.
You've been in the job for quite a while now, and you've known that the NBN cash was coming in for quite a while. Surely you must have narrowed things down more than that.
Yeah, and that's why we've always said that our three growth areas have been around media, Asia and network applications and services. So we've been very clear about where our growth area is now for 3 years. But within that, there's many opportunities you've got to look at.
Would you like to own more of Foxtel, leaving aside whether it's available or not? And what does your answer to that question say about what you think IPTV is going to do to Foxtel's business?
No, firstly, let me answer the second one. I think IPTV is a complementary way of distributing content to a different set of users. I don't think you really, be it cable, satellite and IPTV, they're all ways of distributing content. The pay TV model, which is paying for content, is really what you've got to look at, and I think people will pay for content. Now, to your first question around are we interested in buying more of Foxtel, we think it's a great asset, but there's many considerations around that. One, is it available? Two, would the regulator let us? But there's no question, we're very pleased with our investment in Foxtel, and we want to try and see what we can do to create more value for shareholders going forward.
Thanks very much, David Thodey.
Thanks very much, Alan.
Well, joining me this week, business commentator from The Age and the Sydney Morning Herald, Adele Ferguson, Marcus Padley, author of the Marcus Today newsletter and stockbroker at Patterson Securities, and a director of the Australian Shareholders Association, Stephen Mayne, and many other things too. Welcome to you all.
Thanks,
So
Alan.
how did the market react to Telstra's breaking the news that there were no buyback?
Well, it was a jam tomorrow announcement. So everyone was expecting a share buyback, $2 billion, which is about 16 cents a share immediately, and instead they're being told, no, you're not going to get anything until 2014. There's no share buyback, and it'll be paid through dividends.
And the stock went up.
And the stock, initially it fell 6 cents, and then it ended up the day up 3 cents, which is basically falling 2%, up 3%. And it just shows you the market's still very cautious. Telstra is effectively a proxy term deposit, and the moment it gets sold off, everybody's bought it again, which just tells you the market is not... in a bull market, the biggest risk for Telstra is if we went into a bull market, because it would just get left behind.
Oh, it's an 11 or 12% yield, right?
It is, yeah.
Including, if you include $1 billion a year in 2014, you can add another, 8 cents per share. So you're talking then about a 10% yield before franking.
Yeah, it's
from
still better than a term
2014.
deposit, isn't it?
Yeah, which is what people are looking
It's
at.
paid back $1.40 fully franked in 5 years. That's $17 billion. The government's done a ridiculously sweet deal, $11 billion post-tax NPV, $20 billion real cash through to 2020. The stock's rallied from 280 to 340, and the stupidest investor out there is the Future Fund,
Which is owned by the government.
The government
itself.
makes all the value for Telstra, and then its own shareholder dumps it at 280, and everyone else gets the benefit. So I think it's a great story. $3 billion of surplus cash, dividend to go up. 2 years ago, it was all about can they keep borrowing to pay a 28-cent dividend. Now it's we're going to crank it up.
And you had Thodey rubbing the government's nose in it, really, bringing out the Blunt report where they're saying in 10 years' time it'll be worth nothing, and they've just paid $11 billion for it.
It probably wasn't worth nothing, I guess, in 2010, as Frank Blunt said. But I guess the tenor of it was correct.
Absolutely.
The PSTN was going to be worth nothing.
Yeah.
But it was quite interesting. And the NBN now is paying all this cash out, specifically about $4 or $5 billion cash, net present value terms, for decommissioning that worthless copper.
Yeah, that's right.
It's all pretty amazing.
Out of the broker research, everyone's still got a hold on Telstra. No one wants to say it's great. So there are a couple of showboats with $4 target prices, but the rest have the target price where the current market is, and that's the story.
Yeah. It'll be interesting to see what sort of acquisitions they will look at. There's been a lot of talk about Foxtel, but are there other media assets that they might be interested in?
I can't see the three billionaires, Stokes, Packer, Murdoch, handing over more of Foxtel to Telstra.
No, that's what I'm saying. Is there something else they might be looking at? They need content, don't they?